What's good, day traders? Welcome to day 14 of the bootcamp. Today, we're going to be talking about breaking of structure and tools that I would use to help me when it comes to looking at break of structure and trend and trying to follow along with the trends. Okay. So, before we get into that, first and foremost, we are on day 14 of the bootcamp, super lit. We're 2 weeks in. And for anyone out there that have been watching me from the start, you can see the build up of what we're going into, and you can see that we are now becoming more in depth into the market. We're starting to see more things in the market, and eventually you will become a professional. So we're going to look at the market here, but before we look actually into candlesticks and the market, I want to show you a few things with the market. So when we first spoke about market structure, we understood that market doesn't just go in a straight line, it goes up and down, right? Like a roller coaster. And the problem with this is we would like to, when we look at like an uptrend, for example, and I've seen a lot of traders do this, and I don't know why we always do this, but every time we're going on an uptrend, or if the market is going down, we always try look for reversal, right? For example, if the market is going down like this, we're always trying to get that reversal to pump back up, right? And in reality, guys, that's just never the case. It's very rare for the market to, for example, if it's going on this uptrend, it's very rare for a market to just continue to go down like this. If it continues to go down like this, there will be some sort of shift in the market. There will be some sort of shift when it comes to market structure, and that's what we're kind of looking at today. But importantly, I want to show you guys how to go along with the trend. Okay, now my 5 years of trading, I've realized that a few things about the markets. Number one is never go against the trend. For example, if the market is going down, do not buy. If the market is going up, do not sell. So, for example, if market is, going up like this and we just keep going up, I wouldn't sell at any of these points. Even though, yes, price has gone up and we are looking for selling points, price can just continue to go up, right? And likewise, if market is going down, right? So let's say we are going down like this, right? Just because it's broken structure, we're not going to wait for the retest. We are, and prices keep going down. We're not going to just buy for the retest. We're going to let the market continue to go down and build that structure, okay? And most importantly, what we like to do when it comes to trends, right, is once we see, so we got low and a high. Once we see a higher low, for this is for an uptrend, so a higher low and a higher high created, what we would like to do is we would like to enter at this point of area, right? Now, I showed you last time, guys, that if you draw an area around, this high, the first initial high of the market, the first pivotal point, the first point of market structure, 9 times out of 10, you are going to see price reverse to that point. But guys, the market is never going to be that crystal clear. The market is never ever going to be, as easy as, oh, break, retest, break, retest. It's never ever going to do that, right? For example, this can go all the way down here, okay? Right? Just above this low. And does that mean that price has now broken structure? No, it doesn't mean that. It just means that we need to now see, could it be that price is forming a double bottom? Okay, so price will always do random moves, and we just got to train our eyes and practice and see these moves so that we can place trades in the market. Okay, now most importantly, where we want to identify break of structures in the market, right? Where market has broken structure to show us the trend. Okay, so what I mean by break of structure, right, is if price has formed, right, this low, this high, and prices just form a new low, right, which is higher than this, right, and then price decides to come to this level. Now, price does a few things when it comes to this level, right? It's either gonna go down like this, or is gonna break this level and continue to go up. Okay. Now, for example purposes, the market goes up. Okay. And what do we say with this area right here? We would call this area break of structure. This is the area of break of structure. Okay. Now, it's very important to identify break of structures, because then what we can do is we can draw area at this break of structure, and now that has become our POI. Okay, our POI is our point of interest when it comes to the market. Okay, so then what we do, Doesn't matter how high the market goes, the market can continue to go up. But then what we do is we wait for price to come back to this POI to test out if buyers are in control, or was this just a impulsive move and it needs to be corrected and we're just going to continue to go down. Okay, so this is the area where we would like to trade. Now there's two ways that we would either trade, either buy or sell. Again, if we're going to sell, we're not going to just sell immediately. We're going to wait for price to come back to this POI. Once it's come back to the POI, that's where we continue to sell. And funny enough, guys, the reason why I love market structure so much is, cool, let's just say price did this move right here. So price has done a break, retest, and gone up, right? What has this formed? Well, this has formed an easy break and retest structure. Okay, but then let's say, for example, price has done this, right? Which is price has gone up, right? And it said, you know what, we're going to come down to retest this area, this POI. And then it says, actually, you know what, buyers are not actually in control of the market. This was just a impulsive move to the upside. Maybe it was fundamental news or anything like that. And then price has come down and said, okay, no, we are not interested in this area. This area is not something that we're interested at the moment. So price will continue to go down, right? And then price, you know, a lot of buyers are going to be closing their trade because they're not now losing their trade, right? If you're a buyer and you've bought right around, let's say here, right? And you've obviously targeted all up here. If price decides to come near your entry point, 9 times out of 10, a lot of people have trading stop losses. A lot of people have moved their stop loss to break even. They are going to get stopped out, right? Which then causes the market to go back up, right? And then creates this move where price can now form a head and shoulders, right? Head and shoulders, what do we see? Left shoulder, head, right shoulder. Boom, like this, okay? And that's the importance of understanding the initial break of structure, okay? So we're gonna look at the markets and we're gonna look at break of structures. We're gonna identify break of structures and see how easy it is to identify them and how easy it is to place trades. Now, I've shown you a few examples when it comes to break of structures and what we can do when it comes to break of structures, right? But there's gonna be times where you will not be able to identify the breaker structure, okay? And as a trader, you need to make sure you are aware of these breaker structures, okay? And it's not going to always be crystal clear on this on where breaker structures are occurring, but as a trader, you need to know this because this is what's going to help you with your trades and help you with your trend biases, okay? So for example, let's look I like to use the 4-hour chart, by the way, but let's look at this area right here. Okay, this whole area right here. Okay, we'll look at this leg right here. Okay, now this leg has a lot of breaker structures, a lot of shift in the markets, a lot of points where we could have entered. Okay, and so we're gonna have a look. And let me just undo that. Okay, so let's have a look. The initial. Okay, so we're gonna pinpoint everything, okay? So this is a low, okay? We know that. This is the lowest point, okay? Then price decides to come up, okay? And then price comes down, okay? Cool, fine. This is a high, okay? Cool. That's a high. Did we have any structural points in the market where it caused it to go up? Was there any break? Yes, indeed, there was. There was a break within this area right here, right? So what we're going to say is this, is going to be a break of structure, okay? And what does that mean? It means that price, and I'm going to scale in a bit, okay? This means that price should have respected this area, right? A lot of sellers were in this area, okay? A lot of sellers, right? We sold once, twice, 3, 4 times, right? So in perspective, reality is that sellers should have sold at this area. But in reality, guys, what happened? Price ended up breaking up, okay? This is called the breaker structure. This is the POI, okay? And it's very, 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 very significant because this POI is actually at a round psychological price, right? 0.7. Oh, no, not 0.7, 0. 87. Right? There we go. 1.08750, a round psychological number. Okay. Now, we had this breaker structure, and we actually had many breaker structures. We had 1, 2, 3 structures broken. So we're going to draw this out. That's our second. And this is our third. Okay. So we had 3 structures being broken. Okay. So for me, these 3 areas are areas of interest, right? Boom. And then obviously here as well. Okay. And you can actually see how price respects each of these areas, right? It respects this, this, and this, right? And you can actually see clearly that price actually tapped into here, right? And in reality, guys, you can see that the best level was this level. And why was that the best level? Well, it was because we had 1.09, another round psychological number. And you can actually see the more round the psychological number is, the stronger it is for market. Okay, so we can then obviously remove this, right? Because we have a round psychological number here. It's very, very strong. 1.09 is very, very strong compared to 1.08750 and compared to 1.9, let's say 500, right? Or 400. This is around one of the strongest round psychological numbers. So I'm going to keep this as a key interest. And then what happens? Price, obviously. So we had this downwards push. Then we had this upwards push. And it comes down to retest, right? Same structure, guys. Same sort of movement, right? Coming down, going up, retesting, right? Same structure, okay? And this is where our fancy tool comes in. And before we look at this fancy tool, I want to just advise you guys that what I'm about to show you is a game changer, can change your perspective of the market, but you cannot use this tool by itself. You have to have it backed with the breaker structure, the support and resistant areas, and a round psychological number. Okay, so that's what you have to do, guys. Please, please do not use this tool that I'm about to show you by itself, because you are going to lose a lot of trades. Okay, and it's called the Fibonacci retracement tool. Okay, and what we normally do with the Fibonacci retracement tool is we find the lowest point in the market of this move, right? So this leg, we find the lowest point of this leg, and we find the highest point of this leg, like that. Okay, and you can actually see very, very clearly. Okay, and we can actually scale in, but I'm going to just show you just by itself. Just gonna remove this for a second. You have to see that price rejects at the 50% extension. Okay, and I'm just gonna have this over here so you guys can take a screenshot and keep it in your arsenal, because this is a tool that's going to help you. Okay, so just take a screenshot. This is all the things. We got the levels, text, tick, all of this, and these are the numbers right here, right? And obviously I keep the golden zones are my take profits, blacks are my entries, okay? And so to make things easier, what I like to do is, if I have, let's say, a round psychological number, a break of structure, a area of interest, what I like to do is, because I know that's most likely the area, I will untick the ones that I don't need, the areas I don't need, to make it much easier for me to read, okay? And now I can clearly see that price came here, tested here once, tested it twice, forming that nice double bottom that we like to see. Then we would enter, because why? We had one break of structure. Number 2 was support and resistance, or area of interest. Number 3 is crossover in the moving average. Okay, number 4 is our Fibonacci retracement. Okay, so we have 4 confluences to tell us that market is going to continue up. Okay, and then what happens? We keep our stop loss. Obviously, we can keep our stop loss actually below the moving average. Okay, because if price decides to come down, well, we can just get a better entry. And then we'll put our take profit at either minus 27 or the minus 61.8. Okay, and you can clearly see, guys, that this trade itself is a 1 to 6 risk to reward ratio, and we have hit profit. And not only have we hit profit, it's actually one of the best entries you can get, okay? And if you want, you can always scale in to the 1 hour, right? And you can actually find, right, a entry candlestick, right, which is clearly this one, because you got that evening star getting created, right? So you got the evening star getting created and prices continuing to go up. And not only that, guys, is clear as day that market has formed, right, 1, 2, 3, basically 4 taps, right? And you can see that we are very bullish because the first tap was quite bullish, second tap was bullish, third tap was bullish. Prices come here, stopped all these early buyers out. This is the real buying move, right? And you can see that price has then scaled all the way up to both our TPs. Now, you don't have to keep it all the way up here. You can still keep it up here. This is another trade that I would have taken, right? And you can clearly see, guys, it's very, very clear that knowing our break of structure points and knowing the structural points, right, you can place trades like this, okay? Now, let's do it again. Let's look for another move. Let's look at this move here, right? Same kind of formation, right? This move here. Let's have a look at this and see how it works, okay? So we have, again, structural point. Price has officially created, obviously, this, boom, high, low, or actually we could call this a low, but let's call this the low, low, and then high, okay? So we had price come down, okay? This is the low, right? Or we could call this the low, actually. Let's call this one the low because we haven't actually had that breaker structure. This is the whole structural leg, okay? So high, low, kind of like a retest, and then the moving average, and then obviously creating that high. We will have breaker structural point at this level. And guys, for you wondering, how do we draw break of structural points? I don't like to include the wicks, okay? So if I was actually on the 4 hours, which is much better, I don't like to include wicks, guys, okay? So because I don't like to include wicks, right, I do not count this area as the break of structure. I'll count this area as the break of structure, okay? Not only that, guys, we can clearly see, and I'm just going to draw it out, and you guys can tell me what you see as this. This is not the best head and shoulders, okay? But it is, if I just make this like this, you guys will clearly see reverse or inverse head and shoulders, right? So we're getting all these confluences now. So we know that, okay, price is just coming down to retest. It's not actually going to crash down, okay? So cool, we had this breaker structure. What we'll do is we will draw an area at this breaker structure, okay? And we can see that price has actually, it didn't reverse at this breaker structural point. Okay, no worries. What we do is get our fancy Fibonacci tool out at its lower point. Now with the Fibonacci tool, guys, this is a little bit different. We like to go wick by wick. With the area of interest or the break of structure, we like to go body to body, okay? So just something to put notes in, okay? And again, we draw like this. Now in this case, guys, you can see that price did respect the 50, right? And I'm just going to get all the levels back up. 61, there we go, 70, there we go. And you can see that price, it hasn't really respected as much. And that's because this leg here formed a new low, okay? And so therefore, and I deliberately did this, guys, is to show you, therefore, the new low is here and the leg that was created was this leg, right? So that's why you have to be very, very sure, right, that legs are created properly, okay? Now, if you see that even though we put a leg here, right, or here, it doesn't make a major difference, okay? And this is why I wanted to show you guys, because it doesn't actually matter where you put it, right? As long as it's a low and you follow it through. Now you can see that, guys, over here, you can clearly see that it wasn't respecting any of the Fibonacci levels. However, if we scale in, right, you will actually see that even though price didn't respect it, price has respected a zone near it, Okay, and that's why it's so important not to just go off the Fibonacci retracement, right? And rather going based on market structure as well. So you can actually see there is structural points around here. And hint, 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 how clever is market, right? Because that was at this break of structure. Okay, so if I just draw out the market, boom, like this, okay, cool. And then price comes here, and then this, right? And I move this, you can actually see, guys, that we had the break of structure at this level, right? The break of structure was indeed at this level when we scale in. Okay, so again, price action, guys, market structure is very, very important, and we can go through the markets and keep doing it, right? So again, we had the same thing. What I would like to do is what I would have done is this wouldn't be a really, really good entry for me, but what I would do is I would wait until I see market structure clearly showing me some type of move, right? And we can clearly see here we had another break of structure, internal structure, but we didn't actually get a clear signal for me personally. So therefore, this trade wouldn't have never occurred. As simple as that. Okay. But if you have any other rules or you see any type of movements or whatever it is, by all means, just based on this, we would enter. And the reasoning for enter here is because obviously price has come up, didn't quite do any kind of move. And to be honest, guys, I wouldn't even actually enter here. I wouldn't enter at all. But let's just say, for the sake of this video, we enter after this candlestick, okay, below this Fibonacci, targeting all the way up to either TP1 or TP2, and you can see that it still smashes TP1 and TP2, okay? And that's the power of the Fibonacci. Okay, so guys, the reason why I'm showing you this is because there isn't any correct way of drawing Fibonacci tool, but you have to understand structural markets. Okay, you need to understand how the market is, how market structure helps you when it comes to the market. Okay. Now, this is not always going to be perfect. This is not always going to be a thing where, you just need to draw POIs, break off structural points, and then the Fibonacci and you're good. No, because sometimes market will be at its peak, right? Like here, and then it just won't break its high, and everyone's buying here, won't break its high and just crash down. That's just unlucky. That's just part of the game, right? But when you see price crashing down and breaking structure, right? The initial everyone would think, oh, we just missed this whole leg. But reality is there is an entry point at this leg. And I'll show you, right? Again, just based off structural point. So this is the low, breaker structure, right? And we're going to I'll just show you guys. We draw area right here. You can see the breaker structure, retest, enter. Stop loss above here, targeting maybe the new lows, which is here. Okay, and this again is 1 to 6, 1 to 6 withdrawal ratio. Okay, again, if you were using a Fibonacci retracement tool, you would put it at the high, the low, and you can see clearly 38.2. Guys, this is not made up. I didn't just cherry pick this. We're just going through the market like how you do as backtesting, right? And you can see price hitting TP1. Didn't quite hit TP2 straight away, but if we held it for much longer, it would have hit TP2 as well, right? So guys, the reason why we have to emphasize this is because we are now building our own POIs. We are now building our own entry points, okay? Break of structure is one of the best times for you to enter the market. That area is one of the best times to enter the market. Why? Because a lot of people will obviously, early buyers would buy at this point, okay? And they obviously, when they're in profit, they're closing their trade, right? So when they're closing the trade, there is going to be a little bit of correction in the market. And once they've closed their trade, let's say around this area, price is going to slowly come up. And then what's going to happen is big institutional traders, the big banks, the people that have a lot of money, they're going to be like, oh, no, 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 no. We're continuing to go down. And that's where we can take advantage, and not on this move, because this move is too early for us, right? But on this move itself. And even guys, even if you see price retrace, right? Retracement if you guys are unsure what retracement is, and we're going to do a whole video on Fibonacci retracement, by the way, but retracement is when price, right, has created structure and is coming back up, not to break structure, but to follow through. And this is called the retracement. This is called the retracement, right? So we've got the downwards push, retracement, downwards push, retracement. And that's for a downtrend. Same thing for the uptrend. We got up, down, up. This downwards push is the retracement. This downwards push is the retracement. So we got the up, down, it's called retracement, up, down is called the retracement. And that's where you use your Fibonacci tool to predict where the retracement could be. Okay, again, you wouldn't use it by itself, but just example purposes again, in case you guys wanted to see the power of Fibonacci tool, you can see price came down, retested this area twice, right? Comes back up, taps into 78.6 extension, right? And then what happens? Price plummets down. Okay, and that's the power of Fibonacci retracement. Okay, the reason why this by itself is really, really powerful, and I really want to do a video just by itself for Fibonacci retracement tool, is because it changed the game for me. It helped me line up my break of structures, my area of interest, and the Fibonacci tool just helped me get that precise entry. Okay, so we're going to talk about that on Monday. So tomorrow is our break, but guys, for your homework, okay, I want you guys to identify break of structural points. Okay, break of structural points are areas where price has broken some sort of structure. For example, a new high. It's created a new high. Or another example is it created a new low if we're going on a downtrend. Okay, so doing that, practice, 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 guys. Tomorrow is, I'm not giving you a video tomorrow, but it is very important for you to practice and for you to back test this. Is very important, guys, okay, because this is what's going to help you identify the markets, identify entry points. A lot of you know might question, oh, how do I find entries? How do I find myself inside the market? Because that's the most difficult part, is getting that good entry. And the reason why it's difficult is because a lot of people have different area of interest and different break of structural points. But if you line them both together, you're going to find yourself having the best of the best entries in the market. Now, disclaimer, guys, you're not going to get the best entries every single trade, which is totally fine, right? But lining all your confluences together and putting it at one point, for example, round psychological numbers, break of structural area, area of interest, Fibonacci retracement tool, moving average crossover. Those are just 5 confluences itself will put you on a higher level and a better setup than something just based on break of structure or break and retest or just using the Fibonacci tool. Does that make sense, guys? So I need you guys to, as for homework, I want you know how to draw support and resistance or area of interest, okay? You know how to draw that. Now what I want you to do is line them up with break of structures, okay? And not only that, I want you to line it up with round psychological numbers too, okay? So guys, do that, right? And do that as many times as you can until your eyes are trained to see it. And not only that, do it for next week as well. Draw out your area of interest, draw out the breakable structure points, put it so it corresponds with your round psychological numbers, and see next week if price respects those areas, and if you can find entries and if you can make profits in those entry points, okay? But that's it, guys, for today's bootcamp. It's been a really, really good run. It's been 2 weeks in. We're doing fantastic. We're really getting good engagement. But guys, I need you guys to share this as much as possible. I need you guys to like, comment as much as you can. Let me know what you're feeling, what questions you want, and what you want in this bootcamp. If there's anything that I rushed and you want me to go through it again, I can easily do that. Make sure you do that. Subscribe, share it to every single person you know that needs to get into trading. Even if they're not interested, get them on board, because we're in a new era, okay? I call this the golden era because it's like the first time crypto went up. You know, right now crypto's going up. You know, everyone's trying to get into investing. This is the time for you guys to take advantage and become a professional trader, okay? So this is the time where the old traders kind of die down, and this is where the new people come in. Yep, Out with the old, in with the new. That's how the market rolls every single time. We're in this new golden era. So therefore, it's you guys' opportunity to take the ranks and get and become a better day trader and become the day trader you want to be and become successful. But other than that, guys, I will see you guys on Monday.